when you have a company and like-minded people with you partnering on the deal and bringing the, like you said, the strengths.
I wish I knew the power of partnerships. Just think about creating a championship football team. You have to have a person who excels at tight end, person who excels at quarterback, person who excels at running back, right? Like finding those partners and figure out the position they excel at and letting them sit in their genius and you sit in your genius. You can literally make 1+1=1,000,000. When you figure out that synergy, people's strengths, mitigate their weaknesses, your ability to scale is exponential.
Hello everyone and welcome back to another episode of Path of Progress. I'm your host Alex Kononov, and today's guest is someone whose journey will resonate with anyone looking to break out of the traditional W-2 track and build true financial freedom. Andrew Fried is a multifamily investor, agent, property manager, and mentor based in Massachusetts, a state that many investors avoid, yet Andrew is thriving in it. Over the past 4 years, he's grown over 0 to 400 units, including syndications, house hacks, and self-managed portfolios, all while still working a W-2 job for most of the time. Andrew, welcome to the show.
I am excited to be here. Thank you for having me.
Thank you for coming. Listen, Andrew, for those who don't know you, let's start from the beginning. How did you discover real estate?
So, I discovered real estate because, growing up, I was sold the false narrative, right? Get a good education, get a good job, get a nice six-figure salary, get a swanky condo in the city, right? Like do it all and you essentially made it, right? And I worked my entire 20s to do that. I got my bachelor's from UMass Amherst. I got my master's. I ended up becoming a project management at the Broad Institute of MIT and Harvard, got a six-figure job, got a nice swanky condo in Boston. Like I did it step by step, right? But at the end of the day, when I came home, I felt empty. I felt like I was locked into a prison. Like ultimately, yes, I had 12 months of reserves, but I was tied to that job. I needed to go to that job every single day. It had a control of my time, right? And that scared the living hell out of me. Like I knew, like, is this going to be my next 20, 30, 40 years? And like, I couldn't live with that, right? So I really had to make a change. And that was right during COVID. And thankfully, I found that amazing book, Rich Dad Poor Dad. I ate the purple pill, and more or less, that book essentially breaks down this psyche of the American dream and really shows you how the financial system really works in America, right? And there was little inklings of real estate, right? So at that point, I started going down the rabbit hole of real estate, starting listening to Bigger Pockets podcast, started reading books, starting to go to meetups, right? And more or less, I came to the realization that real estate was my means toward financial freedom. So at that point, my net worth was around $250,000. $200,000 of which was in my one-bedroom condo I bought 5 years ago. It literally took me 10 years to save up $50,000. So at that point, I decided to, essentially YOLO, to leverage everything I owned. I took a HELOC, a home line of credit, on my one-bedroom condo for about $200,000, and I utilized that as seed money to start buying multifamily property in Worcester, Massachusetts. So I started house hacking one property, two property, three properties. I bought the property, my neighbor's property right across the road, right? I got about 30 units after leveraging everything I had, my line of credits, my 401k, promissory notes, but I still had these amazing deals come my way. And at that point, that's when I realized how to leverage, other people's money. And I started raising capital from investors. And 4 years later, during COVID, I'm up to around 400 rentals.
Andrew, you just went from A to Z. Let's rewind a little bit. Your first deal, full multifamily. And when you say multifamily, are we talking about large multifamily, or you just want house hack on a small 2 to 4 units?
So when I say multifamily, I typically mean, anywhere between 2 and 100 units. That's kind of where I play, right? But to your point, there's residential multifamily, which is 2 to 4 units, and there's different rules that apply to that. There's commercial multifamily, 5+ unit properties, and there's different rules associated with that, right? So when I first got into the game, I was in the residential multifamily market, right? And I got in that with this magical tool called the house hack, right? Where I was able to leverage a low down payment owner occupied loan to get into a 3-unit in Worcester, Massachusetts. I ended up taking, I believe, around $40,000 from that line of credit, and I utilized that combined with an FHA loan, a 3.5% down loan, and I utilized that to get into a $560,000 3-unit in Worcester, Massachusetts.
Love it, love it. And there's rules, right? If you do FHA, you have to live there. So it's actually worked out for you. You house hacked from this. So talk about cash flow. were you able to break even after you rent into other units, or did you have to come up with money as well?
So, the amazing thing about a house hack is it really can amplify your journey towards financial freedom, right? Because typically, if anybody owns real estate, right, they know that like a rental unit and a multifamily unit, it may provide $150 to $200 of monthly cash flow per month, right? And given that calculation, you need a good like 40, 50 units to reach financial independence, right? But the amazing thing about a house hack is it really eliminates your overhead, your living expenses. So you can essentially eliminate $2,000 your rent from your living expense. And that's exactly what I did. So I moved into this 3-unit property. Each unit rented for about $1,600. There were 3 of them. My mortgage was $3,200. So 2 units rents covered the mortgage, and I lived in the last unit for free, amplifying my savings rate by approximately, $2,000, per month.
Awesome. So this was your first deal. So it unlocked you extra spending capital to go for more residential space, multifamily, other space. So what was your second deal? How long did it take you to go from one to second?
So I closed on my first multi December 2021 with an FHA loan. And my second deal was actually a syndication deal where I was a limited partner. And if anybody knows what a syndication is, a syndication more or less is when, a syndicator, a general partner, runs across really large deals and raises money from investors to essentially take down a larger deal and gets a cut of the pie, right? So that's essentially what happened, but I was on the limited partner side. So I was strictly bringing the money. And, the reason why that was my second deal was, first of all, it was a really good deal. I think it was 130 something unit in Lowell, Massachusetts, which is a very nice city in Massachusetts. And my mentor, who owned about 300-400 units, was raising for this deal. I thought the deal had great fundamentals, but I also wanted to provide value to my mentor and have him, feel a need to provide help to me, right? So I ended up investing in his deal, and I didn't invest my own cash. I ended up investing with that line of credit I got on that condo I mentioned, around $65,000. We bought a 130-unit building in Lowell, Massachusetts. I put $65K in there, and I think a year later it sold for an 89% return.
Yeah.
Yep. So, and then I think I leveraged that into a 5-unit. So that was a fun deal, right? That was my second deal. But
how did you jump from small residential to multifamily? You actually went after that. You said you had a mentor. How did you find this mentor? It's a really different path right here. We're talking about residential and commercial right away in 130 doors. People usually get scared of the size.
Yeah, I mean, let's put it with a grain of salt, right? Like I was a limited partner in a syndication, right? I had a small little piece in this 132-unit building. I simply brought the money, right? I wasn't the general partner. I was not leading this deal. I was simply the capital, right? Like later on in my career, I became the GP. I took down these larger deals, but that was not my first deal. Essentially, the main reason why I ran across this deal was this guy, John Bombachi, in my market. He hosted all these real estate meetups all over Massachusetts, and he was incredibly knowledgeable. He was definitely somebody who I wanted to model. And he ran across his, he was doing his first syndication deal. He was looking for capital. I thought that was my easy way to provide the guy value. But, on top of that, the deal made sense, right? And, I thought from my perspective, like I have my HELOC, I'm borrowing at 3%. It was during COVID. This deal was offering me a 15% return. Like, the simple concept of arbitrage. This is how rich people get rich. I borrowed money at a 3% and I put in an investment at a 15%, right? Like that, it was that simple, and kind of why I went into that. And don't get me wrong, it was lucky. I bought in the right time, the right place, the right market conditions. But that was my second deal, and it definitely worked out well for me.
I love it. So after that, you rotated money to a 5-unit deal?
I did. So I recycled that money directly into a 5-unit property. We bought a 5-unit in Worcester, Massachusetts, 35 Uppsala Road. We bought that for around $650,000 right in the MLS when 3 families were sold for $600K. I ended up finding a partner. We split it 50-50. And the great thing about that particular property was, I think when we got it, it was very depressed rents. I think on a 5-unit, it was $3,500 monthly rents, but it had the ability to get the rents up to $9,000 per month, right? And if anybody knows anything about commercial real estate or buying businesses in general, it's valued based off the cash flow or the revenue of that particular asset, right? So, this property, if we brought the revenue from 3,500 to 9,000 per month, we would have brought the value from 600-ish to around 900 to $1 million. And that's exactly what we did. We found a small local credit union or bank. We got a construction loan around $50,000 from them. We used that money to enhance the property in a matter of 6 to 7 months. We brought the revenue from $3,500 to around $8,800. We went back to the bank. We're like, hey, we increased the value of this property. They ended up giving us a second line of credit on our commercial loan, and we utilized that to burr a 9 unit in West Warwick, Rhode Island. And then we ended up burring that into a 21 unit. So it was a lot of trading up.
So for our listeners, I want to rewind a little bit so people can grasp, because you're so quick, man. You just started jump right through your residential deal. After that, you jump into got a taste of limited partner, passive investor in a 100+ unit multifamily. Then you decided, okay, I got a taste of multifamily on larger scale. I got a taste of small. Now what's the next path of progress? Okay, let's jump into small multifamily, which appraises like a large multifamily. Is the same concept. You got underwriting from there. You understand what's going on. Now I can do it myself. Now you're leveraging all your knowledge, all your money into the deal yourself. How long did it take you to do this one?
So to your point, I did jump around, right? Like I have a lot of deals. I do a lot of deals, so it's hard for me to keep a timeline going. But yeah. So so that syndication deal sold a year later. Then I went into that 5 unit. We refied the money out in 8 months. I used that on a 9 unit in West Warwick. We stabilized that in 8 months and took our money out. And then I used that to buy a 21 unit that we're stabilizing right now. So essentially, more or less, I got into around 35 units with the same capital over the course of 2.5, 3 years or so.
Okay. This is great. This is exactly the program why we're doing real estate, because we can leverage and we can actually be creative with your money, and then you unlock in 1031 exchanges and other tax advantages. We don't even start talking about it. Depreciation. It's a whole different podcast. But I want to ask a really important question. Why Massachusetts? I know a lot of people, you live there, so it makes sense when you're local, but a lot of people try to avoid blue states, especially Massachusetts. High taxes, tenants, friendly laws. And when you say casually, we're going to increase rank from 35 to 9,000, it's not that easy. Okay, let's talk about that.
So I love the fact that you asked that question. And the reason why I love the fact that you asked that question is because people have a tainted view of Massachusetts. They think it's hard to be a landlord. They think it's hard to play in this market. And that's the exact perspective on why I am super successful in this market, because I have very little competition, right? And in my opinion, Massachusetts is absolutely one of the best markets to invest in, right? Like, honestly, out of all the states in the United States, Massachusetts would be the last state to go, just from an intellectual property standpoint. So much knowledge is here, right? Along with the fact that it's the top, has the top medical facilities in the nation, has the top educational facilities in the nation, has the top research facilities in the nation, right? There's just so much intellectual property here that, like, people want to live here, right? And combined with the fact that, the cost of construction is so expensive because there's so much regulation, and there's not much land to build on. Like, there's not that much new construction going on, but there's a high demand for people to live here, right? So, there's a multitude of reasons why I love Massachusetts. Like, ultimately, like, the vacancy rate is really low. People pay on time. They pay very high rents. And yeah, I mean, don't get me wrong, it may be hard to get a tenant out. You might have to wait 3 to 6 months in an eviction. But, like, if you know how to play the game, if you know how to offer cash for keys, if you know how to negotiate with them, if you know how to create a win-win, those problems are very easy to rectify. And just to put in perspective, I own, hundreds of units. I think my collection rate is like a 95% right now. People pay, and people do not leave their units in Massachusetts.
Wow. Okay. And what, for example, for new value add deals, like you get in, like, for example, this 5 unit, you said, yeah, we increased from 3,500 to 9,000. People live there for many, many years. To move to another place, right, it's going to be market rents are much higher than they paying for 20 years they live there. So how do you negotiate with them to move out?
You bring up a lot of good points, right? Yeah, their rent is really low, right? But I just take a simple approach, right? Like, when I close the building, I set up a tenant meeting, right? I meet the tenant, and I walk through the unit. All right, do you have any deficiencies with this unit that we can address to make your experience better? A lot of times it's something small, like a broken faucet, a broken window, something easy. I'd pay a couple $100 all day to buy goodwill, right? And then at that point, I approach them. I'm like, all right, this is a 3-bed unit. Market rent, I could get $2,000 for this unit, right? And I show them their estoppel. You pay $1,000, right? They're like, yeah. I'm like, all right, so if I can get $2,000 for this unit, you pay $1,000 for this unit, what do you think makes sense? It's literally human nature to choose the 50% mark. Happens 9 times out of 10, right? So, and the goal there is for you not to propose a rent increase. The goal is for them to propose a rent increase. Because if somebody's proposing a solution, that'd be weird if they didn't follow it. Like, that's just not human nature, right? So the goal is to use this binder strategy to get them to propose a rent increase. You systematically upgrade the property over the first, 1 to 4 months, right? And then you have a similar conversation with them 6 to 9 months down the road. And then at that point, you get, at that point, you're probably a couple $100 off for market. And you don't have to renovate the unit. You don't have to put 50 to 20 grand into the unit. You're a couple $100 off from market. And then you can, then the property is relatively close to market rent.
Yeah, that makes sense. Tell us about your worst case that you had with a tenant.
My worst case I've had with a tenant. Well, we had this tenant, we bought the building, it was really tough for them to pay the rent. Like, they ended up like scrounging it by month or whatever. So we didn't think anything of it, right? And then the tenant stopped paying like 1 month, and like we knocked, nobody answered. We knocked, nobody answered, right? And the second month come around, they're still not paying. We like knocked, nobody answered. So we eventually forced ourselves in the unit, and the guy died 2 months ago, and it was quite the scene. So we ended up having to pay like a cleanup crew to like clean up the body, and it was a $10K expense I could not underwrite for. But yeah, I mean, it's unfortunate, but when you own hundreds of units, it's just a probability thing at this point. So.
Yeah, I mean, that's an environmental hazard, right? You have special crews for that. It's special. How long does it take to clean up that process?
Dude, they cleaned it up in like hours. Like, it was like, dude, like, I don't know. Yeah, I mean, those cleanup crews, like, they know what they're doing apparently. So.
Yeah. Oh my God, that's a hard one for sure. But no eviction on the bright side.
Yeah.
Well. It is what it is. Listen, okay. How do you go through eviction? You said eviction takes some time. How do you mitigate evictions? If someone doesn't pay rent, in this case, it got resolved on its own, unfortunately for the guy. But what do you do? Do you have eviction attorneys that you call? You have in-house all that stuff? What do you do?
Yeah, so I have an in-house property management company. We self-manage around 300 of my doors. But yeah, we have eviction attorneys. So, if somebody's not paying us, we follow up with them consistently. We'll door knock, right? At a certain point, we'll approach them and say, hey, you haven't paid rent. Like, do you just, are you looking for another place? Like, we offer that they can leave, no strings attached, right? That's option number one. Option number two is we'll attempt cash for keys. So we'll offer them a small settlement, maybe help them with moving expenses to help them find a new place, right? And then option three is simply giving it to the eviction attorney. And evictions in Massachusetts typically take 3 to 6 months. It typically takes maybe 3 to 4 weeks to get your court. So you give them the notice to quit, after 30 days of non-payment, and it typically takes 3 to 4 weeks to get a court date. And then from that court date, it might take, 1 to 3 months to get them out. So, but sometimes, if they're backlogged, that court date might be delayed. So, if you're in a different area, of Massachusetts, and those courts might have less judges available. So the court date might be 2-3 months out. I think in Boston, court dates are like 4 months out, right? So it depends on where in Massachusetts, on how quickly this process goes, right? But ultimately, I'm really going to opt for number one or even number two, cash for keys. Like, if it's going to take me 3 to 6 months to get somebody out at $2,000 rent, that's, $6,000 to $12,000 of lost rent, right? So, if I'm paying somebody $2,000, I get them out within a month, I turn that unit and I get it rented, like, I'm making more money in the long run. So.
Yeah, no, I agree with you. It's such a good approach. You have a problem and you have solution for it in a timely manner. You know what to do, and it's just a process for you. You go one for another. But what I like about you, since it's you have 95% collection rate. This is incredible. This is good. I think it's well above the national average, especially with now struggling market across Atlanta and Georgia and North Carolina. Is just.
So I think the biggest mistake a lot of newer investors make is when it comes to real estate investing, they take a principal approach, right? So if somebody doesn't pay them, like, out of principle, I'm going to evict you. I'm not going to pay you any money. They don't deserve to get paid. And so I take an ROI approach. Like, what is going to make me the most money? Like, I don't care if you hit me in the chin. If I'm going to take less damage in the long run, like, that's a win for me, right? And that's the approach that I take in real estate, and that's the approach you have to take in a tenant friendly state, because you have to create win-wins. If you try to, fight the tenant, it's only going to hurt you.
Yep. And then if they're low incomes, they're gonna have pro bono attorneys, and
Yep.
then it's just a long fight. Doesn't not worth it. I like how you cool-headed. You just say, okay, this is what we do, and we have process for everything. Now you self-manage. So at what stage did you decide that you want to do self-managing?
So I've always self-managed my properties, and it's more coming from a point of, I have extremely high level of standards, right? And it's like nobody's going to manage my portfolio to the same extent I'm going to manage it, right? Like ultimately, my property management company, it's a loss leader, right? Like it doesn't make me money. It probably loses me a couple grand a month, right? But I get the level of efficiency I expect, right? And I get to buy back my time. Like I have employees that work with me to help me manage my property. Like, I'd be working 50-hour weeks if I wanted to manage all these units myself, right? Like ultimately, I'm probably working, 10 to 15 hours managing this portfolio versus 40, right? So, and the best part of it, it also offers you a competitive advantage in regards to speed to act, right? Like we stabilize properties within 4 to 6 months. If we hired a third party property manager, it would take them 6 to 12 months to stabilize.
Makes sense. And so, what does your portfolio look like today?
So my portfolio encompasses around 400 rental units. We own a couple hundred in Worcester, Massachusetts, which is the second largest city in Mass. We own about 50 or 60 in Woonsocket, Rhode Island, which is outside of Providence. We own about 50 units in New Bedford, Massachusetts, which is south of Boston, and we own 20 something in North Adams. We own about 30 something in Lowell, Massachusetts. So primarily our holdings are Massachusetts and Rhode Island.
Okay. And you're focusing on multifamily specifically.
So this is my box. This is essentially our buy boxes. We buy multifamily assets, distressed multifamily assets at 20 to 30% discount on a price per unit basis, with 30 to 40%, even 50% depressed rents, right? And we go in there, we stabilize the property, we enhance it, we remove the inefficiencies, we buy it from mom and pop landlord. At that point, once they're stabilized, we refi them out from small local credit unions or banks. That's typically what we buy. And we also buy a lot of portfolios, right? So we'll go to these owners who own 5, 10, 15, 20 properties. And just like when you go to BJ's and you buy things in bulk and you expect a discount, same with buying a bunch of properties in bulk. And that's exactly what we do. We bought multiple portfolios and, syndicated them, bought them, subdivided them off, sold them off. That's pretty much what we purchase in our area.
How are you handling property management when your portfolio is so spread like this?
I have about 20 people that work for me. So
do you have main office in Worcester, or like
how
does it work?
Yeah, so we have our main office in Worcester, right? And we utilize a lot of software. So, AppFolio for all rent collection. We do not collect any physical payment, any checks. All of our payments are collected through AppFolio, right? And because of that, we can reconcile all of our payments in minutes versus, if those mom and pop landlords that knock on every door, like rent collection alone is a big issue, right? On top of that, we have very systematic contractors, very honest and good contractors that we leverage a ton. We don't have contracting in-house, but we use third-party contractors. We probably have 5 or 6 or 7 crews that help us manage that. We also, utilize Show Mojo, which is a virtual showing software for rental units, right, to reduce our leasing agents from having to see the property. There's a multitude of reasons, right? But more or less, we utilize the technology a lot to manage these properties. But ultimately, these multifamily, once they're stabilized, once they have good tenants in there, and they don't have any distressed capex that needs to be done, it's very little time to manage these properties. It's the ones that have to be stabilized. It's the ones that have to get the stabilization that take our time and energy most of the time.
And it probably helps with people staying in the units longer, right? Do you have how long is your usual time people renewing the leases? How many times? And what's your average stay in those units?
Yeah, I would definitely say our average stay is probably 2 to 3 years, right? It depends on the type of tenant, right? Like Section 8 tenants stay there forever, right? You get like white collar tenants, they tend to be more, fluid because they're home buyers, they have plenty of options, they have great credit. Like blue collar, they tend to be in the mix of kind of staying there, right? So it depends on the demographic, I would say, on the length of stay. But, some tenants, like we bought a 23 unit portfolio, like we kept I believe like 22 of the 23 tenants, and we've owned it for like a year and a half, 2 years, right? So, it depends on the asset. But what I will say is people like I own a 32 unit in Lancaster, South Carolina. People leave our units very sparsely compared to other parts of the nation. I mean, and I remember when that 32 unit in South Carolina, we bought a 32 unit. We had to turn 26 of the 32 units in a year and a half. We had 26 vacancies, right? In Massachusetts, that's unheard of. We get like one or two in a building.
Wow, yeah, it's a different state. So that's why you would like to focus on Massachusetts?
Yeah, I mean, and also, like I like to invest in my backyard because I like to have the level of control that I want. Like, ultimately, third party PM companies, like they're never gonna perform to your expectation. Doesn't matter who they are, like they're never gonna perform to your expectation. So like having it in house is ultimately our competitive advantage.
No, for sure. Is it an advantage when you syndicate deals, when you're raising capital for it?
Yeah, absolutely. I mean, we can control so much more when we control the property management. We control, the entire, like our entire goal with syndicating and building this large multifamily portfolios. We want to be vertically integrated, right? Like we want to have like, our own, we already have our own maintenance crew. We want to have our own plumbing crew, our own electrician, our own HVAC crew, our own snowplow. Because ultimately, the more vertically integrated you are, the more control you have, and the cheaper, the more economies of scale you can have as well.
No, that makes sense. And so you said you're still looking for value-add properties, mom and pop. So what is your preferred go-to strategy? Are you trying to syndicate, or are you trying to focus on JV opportunities?
So
at what scale?
So as of now, I'm currently syndicating. I'm actually raising a syndication fund to buy value-add multifamily in the New England market. So I'm actually raising around $10 to $15 million for that fund shortly. And yeah, that's going to be more focused on, buying these value add multifamily at 20 to 30% discount on a price per unit basis, get them the market rents, suck out that equity in the form of a refi, in the form of a 1031, and utilize that money to buy more assets, similar to how I've explained it in the past.
So what is your structure for this fund? Is it a blind fund, or you already have some deals in the pipeline?
We have about 35 units in the pipeline right now, 16 units in Southbridge, 21 units in Worcester, Massachusetts. So, but yeah, I mean, ultimately we're raising around 10 to $15 million. We're planning on probably taking around, probably 20 to 50 properties.
Okay. So you have some deals. So you collecting soft commits at the time, and when you have the real property on the line, then you're going to rotate people into the investments in the fund, or how does it work for you?
So we're gonna collect the money, as it comes in, and it's gonna be getting a 4% return while it's just sitting waiting to put into a deal. And when the money is deployed, it's gonna get an 8 pref.
Okay, 8 pref. Is there any equity additional, or is just 8 pref straight?
It would be an 8 pref 50-50 split. So the investors would get 50% of all the upside, right? Cash flow, refinance proceeds, dispositions, mortgage pay down, tax benefits, 50% of all upside.
Okay, so are you already started raising funds for it, or it's about you finalizing some legal structures?
We are currently in the process of finalizing the legal structure as we speak. I should have that completed in the next couple of weeks.
Awesome. So we'll see it online very soon. Yep. Love it. Okay, let's talk about mentorship and meetups and education, coaching. Yeah, I know you're big on that, so I really appreciate you educating people around you in Massachusetts. And what's your take on real estate meetups? I know it's not the best ROI on your time, right? But I think it's still important to educate everyone and try to help other people who helped you also at some point.
So I actually host the largest real estate meetup in Worcester, Massachusetts, which is the second largest city in Mass. So I think meetups are extremely valuable for building your team and building your network. And I've found most of my partners and my great connections and team at these meetups. I've met my mentor at these meetups. I've met my 50-50 partner at these meetups. I've met lenders at these meetups. I've met contractors at these meetups. I've met capital partners at these meetups. They are incredibly valuable because you're surrounding yourself around like-minded people who are doing exactly what you want to do. Right? So if you're a new investor, I would absolutely make it a habit to go to as many meetups as you can every single week. When I first was investing, I was trying to go to 3, 4, 5 meetups every single week, right? But it's important to go to these meetups, but it's also very important to get people's contact information, to follow up, and to establish a relationship. Because ultimately, if you go in these meetups, you're not getting anybody's information, it's freaking pointless, right? Like, you got to follow through, right? So, what I like to use when I go to these meetups is I use an app called Blinks. It's an electronic business card, right? And you can really gather everybody's information. You can create a little CRM, create little notes, right? And then if you run across a deal or you run across an opportunity, like you can look at that and be like, oh, that person might be interested, or that person might be a great partner. That person might be a great capital partner. Like, it's really good to keep these contacts close at hand, because ultimately that's the true value of these meetup, is kind of building your team.
Yep, and it's when you have already a deal, like you mentioned, when you reach out to them, it's not going to be a cold lead reach out. You already met them, so it's already a warm reach out. You're like, hey, we met on this meetup startup.
Totally.
Well, what's going on with your life? I have this deal. Yeah, now he's like, oh, I remember his face. Let's talk about your deal. So at what point you decided I need to create one meetup like this?
Okay, so the crazy thing about life is that was not my intention going into it, right? My intention going into was finding a mentor and providing this mentor as much value as possible. Because ultimately, people don't understand this concept of reciprocity. But like, if I do enough good things for you, you're gonna feel a need to help me. It's just human nature, right? So that's exactly what I did with my mentor, John Babacci, right? He hosted meetups all over Massachusetts. He hosted this virtual meetup. And he asked at the end of the meetup, he asked the audience, he's like, does anybody know any good venues in Worcester? I'm trying to start a meetup over there. I've been looking around. I can't find any, right? So at that point, I took the initiative to go to, 5 or 6 different venues over that weekend, collect the manager's information, collect pricing, collect video, put in a nice, sexy Google Drive, send it to him, right? And I gave him a couple of different options. I gave him my recommendation. And he's like, this is great. I've literally been asking somebody to do this for 8 months. Nobody did this. Do you want to be our first guest speaker? I'm like, fantastic. I would love to be your first guest speaker. So I ended up doing that first meetup. And then he ended up asking me to host that meetup, right? So I did, because I wanted to provide him value. I wanted to increase his brand, right? And then at that point, I still had my W-2. I was still a project manager at the Broad Institute of MIT and Harvard. I was still making good money, right? But working from home. But he had a brokerage, right? So I was like, oh, what's a great way to provide him value? Get my license, right? Bring him agent commissions. So I ended up getting my license, becoming a broker on his team, right? And bring him value in the form of agent commissions, right? And sooner or later, when I'm bringing this guy a ridiculous amount of leads through the meetup, when I'm bringing him, hundreds of thousands of dollars in agent commissions, like, this guy's going to answer my freaking call when I got a deal and I ask questions, right? Like, I would, wouldn't you? Right? So it's like, so that was my real kind of, thought process going into it. But, the meetup spurred into this wonderful thing that really kind of built, the foundation of my business today.
And how do you balance it nowadays? I mean, you have a lot going on. You're raising a lot of capital. You do mentorship. You have this meetup, investing. Like, how do you do it, man?
It's all about it. So the more successful you get, you realize it's not about leveraging property. It's about leveraging people, right? And I have a fantastic team, right? And my meetup is like clockwork right now. I've been doing it for 4 years at this point. It probably takes me 20, 30 minutes of effort every single month, right? But I have a virtual assistant that knows the process of reaching out to guests, putting the slide decks together, reaching out to the appropriate people. My team helps set me up. They know where everything goes. So it's not that much work at this point, right? And people look at, all the stuff I'm doing, right? But I have systems and people in place to help push these things along without my purview or oversight, right? So that's how I'm able to do all of this stuff simultaneously, is just having a really, really good team. But not only that, it's also about being intentional about hiring right and building a proper org structure where, like, people know their roles, know their strengths, and are doing what they're a genius at. Because if they're doing what they're a genius at, like, that's going to make my life that much easier.
And how often do you guys meet for the meetup?
So we meet once a month, the third Wednesday of every single month. So we probably average around 50 to 60 attendees.
Wow. And is it a mix and mingle event, or you have house speakers every time?
So I always try to switch it up, right? Because, if variety is king at these meetups, if you do the same thing over and over, it gets old, right? So the way I normally do it is I'll, open it up, we'll talk about what we do. We'll talk about some of the great sponsors that sponsor the event for free. And then we'll do like polling software, 7 or 8 questions to the audience to get their feel on different components of the real estate market, like one of those on your phone, the polling software. And then we'll go into maybe like a panel discussion with 2 or 3 different investors, lenders. We'll do a data deep dive where one of my agents pulls, multifamily data in Worcester from the MLS, and we'll see listings compared to, all the stats associated with how strong or weak the market is. Then we'll have a section for some off-market properties, people presenting off-market properties, and kind of go back to networking. So, we try to provide as much value as possible because, ultimately, I've been to these meetups, and if they just have like a guest speaker and it's just like a talking head up there, it's like, that's not engaged, right? The key is to get the audience engaged, to answer their questions, and provide them value.
Absolutely. No, I think you hit a nail in the head. This is what important. This is providing value on a daily basis, and specifically on the events like this. And if I will come to this meeting and will every time I should leave from this meetup a little more smarter, right? A little bit more smarter, and I'll learn something new, and I can engage it, get more contacts, get more knowledge. Shouldn't be just one type. And I like what you just said. It's interesting. You engaging with your audience, you engaging with them, getting feedback, and now they all in this mix all together. And now everyone is involved in this conversation.
Exactly. Yeah, it's definitely more of a collaboration, less so, education.
For sure. Now, let's talk a little bit more about education. You said, so you're doing this mentorship and you're doing this meetup and you invest in, but you keep educating all the time. I know you just mentioned briefly that you're part of a few meetups yourself and masterminds, right? So tell us about this. What masterminds are you part of on your level? What's the next level where you're trying to achieve?
So I actually host a bi-weekly mastermind with like 10 to 15 intermediate level investors in my market. I try to guide them along their path because ultimately I wouldn't be where I was at if I didn't have people help guide me along my path when I was newer. So I absolutely feel a need to give back, right? And then regarding like masterminds I'm involved in, one big mastermind I'm involved in right now is like GoBundance. I enjoy GoBundance. It's a nationwide mastermind. It's for high achievers with a certain net worth, and it's more or less, it's more or less just trying to be the best version of ourselves, right? Like, it's not only about financial means, right? But it's also about, fitness, relationships, family. It's about being rich in all of those buckets of life beyond financial. And, when you reach financial independence, like people think, you're just going to want to sit in the beach somewhere and like just ride off to the sunset. And that's the farthest thing from the truth, right? Like, people who reach financial independence want to still have purpose, want to still provide value to the world, right? But, at the same time, like myself, I don't want to get lost in the grind. Like, I want to also be rich in other areas beyond finance.
I love it. By the way, let's talk about this a little bit deeper. I just saw on social media that you had a dinner with Brendan Turner. So let's unwind this a little bit. He's quite a figure in real estate investing. And both of us started from Bigger Pockets podcast. So it's a really important.
Yeah, I mean, Brandon Turner is ultimately a hero of mine. Like, I wouldn't be where I'm at today without his guidance and his tutelage, right? And, I met him in person. He is just as knowledgeable and charismatic as he is on the podcast. Like, you just feel like you're just buddies with him instantly, right? And, it's funny because I ended up, luckily, I was part of this GoBundance crew. He's at GoBundance. Like, they ended up grabbing dinner. I was, like, lucky enough to sit right across the table from him and, like, chatting him up a little bit. And he had this really interesting theory on where real estate's going to go. And I just found it very interesting. I don't know if I believe in it, if I don't believe it, but I'll share with the audience. He thought that, once AI and robots get the ability to start swinging hammers and doing construction on site without oversight, like, real estate is going to drop dramatically, right? And his theory behind this was the fact that, once the cost of labor gets really cheap with robots, the cost of real estate is going to get a lot cheaper to construct, thus lowering rents, lowering values, and making the economies of real estate just not as impressive as it is today, right? So he was saying once robots swing hammers, he's going to fire sale. So I don't know. I don't know if I believe that. I don't believe that, but I thought it was a really interesting insight. And I mean, I agree with you. I definitely think we got to keep a close eye on AI, and you're either with AI or against AI. And like, it's just like being with the internet or against the internet. Like, I'd rather be with the internet. So
yeah, you can't fight it. It's going to be around us regardless. The genie out of the bottle.
Yeah.
We can't avoid it.
Yeah.
And what about timeline? Did he mention what about his ideas on the timeline when it's going to happen?
Yeah, I mean, I think he said like, probably 10 to 20 years he would expect it to happen. And he's like, right when a robot swings a hammer, I am out of here. That's good. Interesting approach.
I mean, it's a good time to retire. I mean, at least we got an extra 10 years, right? It should be enough. Right. But I think also a combination of 3D printing, which is also getting harder, right?
Yep.
And now we have robotics, AI, and all communicating together, printing those houses and actually finishing it together. Nice touch-up. I think that will be interesting soon to see very soon.
Yeah.
10 years, definitely a feasible timeline for that.
Absolutely.
So, Andrew, I have last few questions for you. So, fire on. First thing that comes to your mind, let us know. Book or resource that had the biggest impact on your real estate journey?
I mean, I've read.
We just mentioned one.
I've read so many books, and what I would say is if you're trying to be successful in real estate, if you're trying to be successful in business, you got to be a voracious reader, right? Like you got to read every single day. You got to eat and breathe reading because like ultimately, like, somebody spent years putting knowledge into this book. You could literally spend a couple hours and suck up a decade of knowledge in a couple hours. Like that's mind blowing, right? But to answer your question, a book that has hit me hard recently because of different stages in my life is Ray Dalio's Principles. Ray Dalio is one of the top hedge fund managers in the world, and his book is on principles that he lives his life and principles on how he runs his business, right? And I'm essentially running a real estate private equity firm, right? So I'm really like kind of digging into his best practices and living his life, but not only that, how he runs his business and how to implement that into my organization. And it's been extremely helpful, right? So that's been good at my stage right now. If I was earlier on, if I was just getting started, if I wanted to get into multifamily investing, I highly recommend the Multifamily Millionaire Volume 1 and Volume 2. Those are nice introductory books to multifamily investing. They give you really good, advice on what you need to know, right? And then and this is like a little hidden gem that really helped me a ton was Meet Kevin's real estate training course. I think it's like $400 or $500 on YouTube. Best money I've ever spent. It's a lot of great knowledge in there, and it really kind of quickened my real estate knowledge. It probably cut probably 6 months off of my learning curve, just that training alone.
Yeah, I love that guy. I follow him. He's really knowledgeable for his age. He's just rock and roll.
Yeah, I mean, I don't really follow him anymore. He's big in the stocks. I liked him more when he's in real estate because he was really knowledgeable in there. But but nonetheless, to your point, the guy's extremely knowledgeable. Yeah, like that guy for sure.
Yeah, really interesting. Okay, next question. Top trade every real estate investor should develop.
Top trade?
Yep.
Top skill?
Skill, trait, yes.
Delegation. Delegation is what the top skill that they should foster, because your ability to scale is directly correlated to your ability to delegate, right? Like I hear so many investors, tell me like, I'm like, oh, how's your unit turn going? Oh, I'm putting up the sheetrock now. I'm like, you're putting up the sheetrock? They're like, yeah. I'm like, you're doing this real estate thing wrong. I have literally I've never even screwed in a freaking light bulb in my units. Like I've never painted, and I own hundreds of units, and the only way I was able to do that is because I leaned into delegation. I leaned into others helping me. I leaned into virtual assistants. I leaned into systems, right? And I leaned into working smarter versus working harder.
Fair enough. No, it's right there. I agree with you. Okay, one thing you wish you knew earlier on your real estate journey.
One thing I wish I knew earlier on my real estate journey was the power of partnerships, right? And the reason why partnerships are so powerful is because, just think about this. Just think about creating a championship sports team, championship football team, right? Like if you're going to create a championship football team, you have to have a person who excels at tight end. You have to have a person who excels at quarterback. You have to have a person who excels at running back, right? And finding those partners and figure out the position they excel at and letting them sit in their genius and you sit in your genius, it's like a symphony, right? And it's like you can literally make 1 + 1 = 1,000,000. When you figure out that synergy and you figure out how to utilize people's strengths and mitigate their weaknesses, your ability to scale is exponential.
And I think even more to that, I will add, it's not only journey, right? Because when you walk alone, it's a little boring, you get tired. But when you have a company and like-minded people with you partnering on the deal and bringing, like you said, the strengths to the game, then it's a whole different journey and you go much further.
Everybody wants to be on a winning team, right?
Andrew, I have one last question for you. If someone will reach out to you and talk to you about your fund or what else you have going on your real estate journey, how people can reach out to you?
They can find me on Facebook or LinkedIn at Andrew Freed. Feel free to shoot me a DM, or Instagram at Investor Freed. Always happy to reach out. Always happy to connect with other investors.
Love it. And I think they can meet you on this meetup of yours. It'll be really the fastest way to meet you in person and talk about deals. I love it.
It would. It's completely free, open to the public. Anybody can come, right? And I think through that meetup, we've definitely created a couple millionaires. So, if you're looking to become financially free, that's the place to be.
That's quite a punchline.
I just realized that. I got to say that.
Trademark.
I know.
Awesome. Andrew, this was a killer conversation. Your stories really prove that with the right mindset, some strategy, and willingness to act, you can, even so-called hard markets, like for everyone, like Massachusetts, you can become a launch pad for your freedom. Really appreciate you sharing your story and really all the ins and outs of investing in the blue state, Massachusetts.
And do me a favor, keep referring to Massachusetts as a hard market so I can keep buying more real estate. Thank you.
100%. 100%. I'm still scared of it. I live there. I know it. So it's really hard. But listen, kudos to you. Really great story and great progress. And I hope you'll achieve many, many things in the nearest future.
Thank you for having me. Appreciate it.
Awesome. And for everyone listening, if you found valuable in our podcast episode, don't forget to like and subscribe and share with someone who's ready to take control of their path. And as always, keep moving forward.